Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 16th of May. So I've seen a bit of stabilisation this week in the markets with tariff talks really coming to a bit of an ease, and a lot of the indices and some of the currencies have really reacted to that. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see we've seen another week of the market basically going up to the previous highs of last week, which is around that 65-cent mark, and then selling off again. And both times have been under duress. You can see we've got long wicks on both of the daily candles, or both previous daily candles, where the market's actually finished nearly halfway or below halfway the actual range of the day. So there is a lot of conjecture there. The buyers were trying to push it up higher, but the sellers have really dominated the last two candles, which really brings it back to that mid zone again at around that 64-cent mark, which has been very, very strong. We can see, obviously, we've got very good resistance here. And it's been a very, very highly active area over the last couple of months, really. Now we've got a 20 moving average bolstering it as well. So that is always going to help with the support story. But realistically, it really needs to hold here, because if it fails to hold at that 64-cent mark and we get a close below this and we're trading next week, say, below 64 cents on the daily, it's going to probably start looking like a mid-move to the 63-cent mark again. So really about 100 pips off that level. Really, I'm expecting a bit of a reversal probably from this point. We want to see a series of higher highs and higher lows on a smaller time frame, and that would kick it on. And it would really be aiming for the 65-cent mark again. That's the most important zone right now, this 100-point range, and a fail of this, if the 20 moving average fails to hold here and we see a sequence of lower high and lower lows in the smaller time frames, especially early next week, then the mid zone of that 63 cents will be the target for that. So pretty straightforward trading. I think the Aussie's been pretty good for that ever since it broke out of this zone, that it has given us these 100-point moves, and they've been very predictable and stable. But really, you go to the smaller time frames and you'll see that they have come down in a very orderly fashion. You can see we've got lower high and lower low all over the place, all the things we talk about each week. So realistically, we should have been able to get those. Hopefully you did, but now it's at that juncture where the 20 moving average should hold it up, and if it doesn't, 63 cents is more than likely the target for that one. All right, over to the US dollar CAD. And we've seen a consolidation week this week, really. We're trading above the 20 moving average. You can see that we got well and truly above it early in the week, and we've been able to maintain that level. We're finding problems at the 140. There's no question about that. We've had 3 rejection wicks off that level this week alone, and each time it has pulled back, but it's only pulled back about 20 or 30 pips. So we're going to be very mindful of that. The pullbacks aren't very heavy, and it's probably more than likely just finding a bit of a base here. I would be very keen on this one to break these highs. If we get a daily close anywhere above the 140, sort of 30 to 40 area, we're looking at a reasonable move. First touch probably at 41, but even further past that, I think it's got the ability to get to effectively probably 141.70 to 80, and the bigger move, of course, is up to 43. But we want to be, that's still got a lot of work to do before it does that. It's got to get past this zone here. But in my mind, we're still in a bit of a scalping mindset where we want to be in and out of the markets relatively quickly. So I would be looking for a break above this level first, and then I'd be aiming for that 141 in the first instance, and then look towards bigger moves once it actually breaks and closes past that point. But I would be looking for scalping moves up until then. If it rolls over and finds itself back at the 20 moving average at around that sort of 139.20-ish area, which we know is a level of support. We can see it through there as well. We had resistance and support, so it's a role reversal zone, very similar to what happened here. You can see we're getting a higher high, higher low sequence, 20 moving average propping it up, and then off it goes. Very similar. Okay, you can see the 20 moving average is propping it up in the exact same level. So if it does get a little bit lower and it's trading around here, I'd be looking for a sequence of higher highs and higher lows to blast through and get to that 141. If we get a daily close below the 20 moving average, especially if it's early next week, I'd be looking at trading it back down to the 137.80. But the preferred trade here would be the long, because I think we've already got that momentum and we're trading above the 20 moving average. So the likelihood of it pushing up is better than actually just rolling over. So that's where we're at with the CAD, but not bad trading. All right, US dollar yen, big sell-off over the last 3 days, you can see, but it hit the target this week again. We obviously pushed up last Friday. We were looking like we were wanting to get past this zone. We certainly did. Got up there and traded around that 148.50, which was our target. You can see we've got a pretty heavy zone there of resistance because we've got support right through there as well, and it touched it only just, and then sold off pretty quickly. Okay, so it's pretty quick because it's a big move, and we're still in a higher low sequence. There's no question about that. We've got higher lows right through, and this pullback is really around to the 20. Even if it comes a little bit lower and catches up to the 20 around that sort of 145.30 to 40 area, if it hovers here, the 20 moving average will catch up pretty quickly, but we will, when I say flat, it's flattening out already. So really, it's only about 10 or 15 pips above it. So any reversal around this point here, any series of higher highs and higher lows on a smaller time frame, and I'd be looking at first, just keep an eye on 146.50 as resistance. But if it breaks through there, then I'd be looking for the previous highs again around that 148.50. Good trading from around here to there in the first zone, keeping your trading relatively short. And if we get a break above there, I'd be looking for new trades up to the higher level on the smaller time frame. So we're really just looking for higher highs and higher lows on the smaller time frames, and then off we go. A break of the 20 moving average, and I'd be looking at the 144 as the target after that. So if we get a daily close below the 20, or if we're trading below there on Monday, 144 would be the target for the short. But again, we've got higher low momentum on the bigger time frame, so the preferred trade would be the long in this instance. All right, dollar index, and we've got, look, another good example of high low starting to kick in. We've got good momentum on the way up. It sold off a little bit this week, no question, but it hit its target early in the week at around that 101.80, the one we've been talking about for a while. And then it pulled back to the 20 moving average and the support zone, which is around that 150 level. Very, very heavy support there. It's rejected twice off it. You can see the 20 moving average is bolstering it, and along with the support, really, really good launch pad from here, I think. I'd like to see it hold above here. It needs to hold above here. If we get a daily close below the 20 moving average and below the 130, then we're probably looking at levels back at 99.20-ish. But the preferred trade here is a long. All we want to see is a higher low sequence on a smaller time frame, and we look to push up to the 101.80 again, and we play in that zone until it does eventually break. Of course, the euro is the one that we would be trading because of the dollar correlation, and you can see the exact same things happening. We're getting in inverse, of course. We've got lower high, lower lows, tested the 50 moving average and a support zone, and pushed up and tried to get up higher again, hit the 20 moving average and sold off twice. Two big shooting star candles off the 20 moving average, which obviously relate to the dollar index. Same deal really here, that we're looking probably for the short more than anything else. In the first instance, I'd be looking for moves down to that 108. 110.80, I mean. This level right here. I'll pop a line there. That's the level that we're looking for. We know we've got support through there, resistance at that point there, and we've also got a 50 moving average. So if we start the trend in the next session and we're starting to get lower, look for lower high, lower lows, pullbacks to the 20 on a 15-minute chart, and trade in the direction of this bigger trend down to around that 110.80 area. If, however, it reverses and it pushes itself back up the chain to the 20 moving average, I wouldn't trade this long until it was above the 20 moving average. So until the 50 is above the 20 moving average, I would leave this one alone. So the short is the preferred trade on the euro. All right, and the S&P 500, you can see it's been a very, very big, strong week. Once that the China and US tariff talk kicked in, the market's done nothing but go up. Just be a little bit mindful that there is resistance not far ahead. We're only about 90 points away from very heavy resistance at 6,000, and we haven't had a pullback in quite some time. So trade this with a great deal of caution is my take on it, because really it could reverse at any time, and if it does, the pullback is more than likely going to be around to that 57 sort of 20 area, which is this support zone here. So you might get a little bit more of a push up, and if it's trading higher in the session, you can push it up and follow it potentially to the 6,000. But if it does start to roll over, look for 57.20 being the next support zone, which is a couple of 100 points away. So you could potentially get a pretty good trade there. But trade this one with a lot of caution, I think, is probably the best advice I can give you, because it is moving at a rapid rate that hasn't pulled back, really properly after a gap. And yeah, there's still quite a bit to play out before we can really be confident that the indices are going to go up and stay up on a healthy outlook. So just be really careful with this one. So hope you've had a great week's trading. We've seen some really good trades and some good levels hit again, are the ones we always look at. So hopefully you're able to get some of those. Have a fantastic weekend, and I look forward to seeing you all next week.